Hey, how's it going? We just got the closing bell a couple minutes ago in the markets, and we got a little bit of a directional day. So we definitely do have the upward bias in the market now. We are risk on, and like I said, probably until the rate decision. We'll see what the rate decision is. We'll see if that drives markets upward or downwards or does nothing and they chop sideways. But the more likely scenario is that we either chop sideways or come back down. There's just not that much more upside in the market left. And I should caveat that with some timing. So we could move up, challenge these highs, go into the rate cut decision, and if the market likes what happens, then we could go a little bit higher. But I'm not expecting us to go keep on going for another several months of moving higher. We're probably going to get capped out at some point, and then we'll need a pullback or a correction before this market can move even higher. And potentially, we have a possibility of the market reversing. It's too early to say that, but for now, we are seeing bullish momentum. We are most likely going to meet or challenge the all-time high, and then we'll see what happens from there. So let's see where money shifted today. We'll take a look at our sectors. First, from this view, and a relative strength on a daily basis, we can see that XHB home builders did well, defense did well, but you can see that they're really just all kind of clustered around the S&P. There's no really huge outliers. It's not like at 11 a.m. 2 hours before the close, we saw that this TLT was an outlier to the downside, and home builders was an outlier to the upside. Everything kind of converged towards the end, and so we don't have any real superstars here. Of course, some will perform better than the others. It's just that nothing's super outstanding. Let's take a look at our sectors in the normal way. And we see that silver got a lot of attention, gold got a lot of attention. That is interesting. That is not mean like everyone is super happy and risk on, or at least not super on, but that's not inspiring a huge amount of confidence. What we want to see is that all the conservative sectors at the bottom, all the risk sectors at the top. So that would be uh, technology, that would be home builders to a certain extent, retail, consumer discretionary, SMH. Those are the ones that we want to see on the top. IWM. What we're seeing instead is, yes, we are seeing some of those up here, but we're seeing a mix as well. We've got retail up here, we've got small cap stocks, we've got consumer discretionary, but we've got gold and silver, and we've got the defense stocks. Those are kind of mixed bag here of super defensive and super speculative. So that means that this market is a little undecided. Yes, we do have enthusiasm. Yes, money is coming back into the market. Yes, the markets are moving higher, but it's telling me that we're cautious and we need to be careful because maybe our upside is limited, just like I was saying a little bit earlier. Let's see what did poorly or what even did anyone lose. Nope, not really. The only one that kind of lost money was TLT. Biotech really flat, real estate flat, XLF randomly up, biotech again randomly up. We got SMH kind of randomly up. So utilities, healthcare, XLP, those did went up, but just not a huge amount. So it's interesting that SMH is clustered down here with all of those that didn't perform super well. And then we've got the tech and materials, kind of middle of the road, energy recovering a little bit. And then the ones that really did perform well were the discretionary, the small caps, the defense, retail, communications, gold and silver, and home builders. So really, really mixed bag. I'd be super cautious with that. Let's take a look at our momentum. 90-day lows, 24, 90-day highs, 181. Definitely favoring the upside right now, but we're not at extreme levels yet. So we can definitely have more room to go up. We do want to be careful though, because last time I checked, let's take a look at our market well, let's look at our momentum first. And you see that all the stocks that are $2 and above that have traded for at least 6 months, we're below that 50, less than 50% of stocks are above their 50-day MA. That's not good news. That's not good news at all. So what we're seeing is perhaps some of the larger cap stocks, some of the Magnificent Seven, those are the ones that are kind of propping up this market so far. The 200 MA, 54%, not in imminent danger of slipping below, but not a hugely comfortable margin either. So let's take a look at our individual sectors and see if any look like they might be in a danger zone. Overall, S&P looks okay. Consumer discretionary looks okay. Staples, very healthy. Energy is the big red flag right here. Then we've got tech. Tech is still not in the safety zone yet. And same with communication services. So that's really interesting. Yes, we are on risk on mode, but we are not super gung-ho about the riskiest assets. So let's take a quick look at XLY, XLK, and XLC and see what we can derive from the charts. XLK just barely making it above the MA50 right now. So what we'll want to see is 2 complete days with the low above that MA50. We prefer to see green bars to see this as a continuation and that, yes, XLK is indeed recovering. Otherwise, that momentum is telling us that we're just not quite there yet. We would just need to see a little bit more strength for us to be confident that this can continue. If we look at XLC, same thing. We just popped up above the 50 MA today. Same thing. We're going to want to see the low above the MA50, 2 days in a row, green bars, all of the same stuff. And then let's take a look at XLY. XLY is looking a lot healthier. So this is probably the strongest component of the QQQ. Let's see if the QQQ made it above its 50-day moving average. Yes. So very similar to XLK and XLC. We're going to want to see this continue. Like I said, 2 days with the low completely above that moving average, nice green bars for this to carry momentum upwards, for this to start to play a bigger role in the S&P 500's performance. So the S&P is doing well, a lot better than the QQQ, because staples have been doing well, utilities have been doing well, those defensive sectors have been doing well. We want to see the less conservative, the speculative sectors doing even better, and those are the ones that are going to carry the S&P 500 to new highs. So if that can happen, then the market will look a lot healthier than it does at the moment. Right now, it's still kind of, yeah, it's looking okay, but we're still precarious. We're still not 100% sure about the prognosis yet. So we're optimistic, but we can't be too sure. If we look at SMH just barely touching that EMA 20, so we still got a ways to go to the 50-day moving average. So this is the big question mark, because this could still come up to that MA 50 and come back down. So SMH, the thing that carried us all the way up so far, is still lagging behind, and that doesn't give us a lot of confidence. So unless some other sector becomes the darling and takes over, then we don't know how much upside is left inside of the market. So overall, yes, slim optimism, then some chance of us, pretty good chance of us reaching the all-time high again, maybe breaking a little bit above it. But how much more we can go above it is going to depend on money coming back into XLK, XLC, SMH. It's already looking like it's coming back into XLY, but we also want to see money come into IWM. And IWM is at some critical levels as well, still below the EMA 20 and MA 50. So over the next week, or at least after the rate cut decision, we're going to want to see all of those break above their MA 50s, SMH, IWM. We want to see XLK, XLC continue to move above their MA 50s. We want to see continued strength in the XLY. And if we can get all of those after the rate cut decision, then this market starts to look really good. Otherwise, we're still on shaky ground. So for now, I would be leaning my portfolio neutral for the most part, maybe slightly tiny bit bullish, but at the same time, I want those hedges. I want those tail risk trades to the downside in case something just falls apart, because the space to the upside is a lot more limited than the space to the downside if we were to drop. So we just want to make sure that our portfolios are protected in that way. So that is a pretty thorough picture. That's probably what it's going to look like for the next week until we get that rate cut decision. But we'll see. Tomorrow's another day. Maybe we start to get a little bit of pullback in the markets, but hopefully the strength continues, because this is looking like a healthy start. If it can continue, then we'll probably start challenging those all-time highs.